Hey, welcome back to YT Finance, and today we are talking about Palantir Technologies PLTR stock, and we're going to be going over two articles today. The first one we are going to analyze is how Palantir Technologies is gaining and has actually outpaced the overall stock market benchmark like the S&P 500, and then we're going to move on to a Bloomberg article where we are going to discuss why Palantir has a secret plan to infiltrate the United Kingdom, which is a huge client of Palantir Technologies, and how this is going to positively impact the PLTR stock price. For more videos on Palantir Technologies, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into it. In the past month, the price of Palantir Technologies increased to $8.46 from $8.24. Price targets for the stock range anywhere from $6 on the low end to $20 on the high end over the next 12 months, according to professionals. In the same time frame, the indexes such as the S&P 500 gained 2.59%, the Dow Jones gained 2.66%, and the Nasdaq added only 0.07%. As of today, the company's shares have gained 9.86% over the last month, so this is a pretty big surge in the PLTR stock price. During the same period, the business services sector lost 11.17%, while the S&P 500 lost 9.22%. This means while the index and other companies within Palantir's sector have fallen, Palantir themselves have found some strength due to them landing a $229 million contract within the last month. Wall Street will be looking for positivity from Palantir as the date for its earnings report approaches. The company is expected to post earnings per share of 3 cents, which is down 25% from the previous quarter. Our most recent consensus estimate calls for annual revenue of $474.58 million, which is up 21.02% from last year. This is actually bad news, though, which will cause the PLTR stock price to pull back because the business is supposed to be growing its revenue by a 25% to a 30% compounding annual growth rate, or CAGR, not a 21% CAGR like the forecasts are predicting, which indicates growth is slowing down at least for the company in the short term due to negative macroeconomic factors. Looking ahead to the full year, Zacks has a consensus estimate from analysts who anticipate and project that Palantir's earnings will be 6 cents per share, and they will bring in revenue of $1.9 billion for the entire year of 2022. These numbers will mark a change of a negative 53.85% and a positive 23.3% increase and decrease respectively from last year, which again will be bad news. Investors may also see recent changes in research proposals for Palantir Technologies Inc., and these proposals reflect the changing nature of the company's short-term business model. With this in mind, we can view a positive strategic outlook for Palantir's management as a sign of optimism about the company's future business prospects, such as the company's potential to become profitable at the end of 2025. Research shows that these changes in strategy are closely related to changes in the stock price, so hopefully with a positive change in strategy, we can see it reflect positively in the stock price. According to a proprietary scoring and ranking system by Zacks Rank, which ranges anywhere between 1, which is a strong buy, and 5, which is a strong sell, they rank Palantir Technologies in their PLTR stock as a 5, which means that they advocate to sell this company. This means that investors should sell their PLTR stock if you are a stock trader. Now, I agree and disagree with them. I agree that if you are trading the stock, the upcoming quarter and the end of the year earnings reports are going to be very red, at least according to current forecasts. But I personally am a long-term buy and hold investor, and because I have less than a 5% allocation to this company, I have no problem holding and not selling this company and keeping a red company until it eventually reaches profitability. Value is another thing that I want to hone in on because we want to say, are we buying the stock price at a good average cost basis? Investors should know that Palantir has a forward price to earnings ratio, also known as a PE ratio, of 143.74. This ratio shows a high level compared to the average PE ratio for its sector, which is only 21 0.72. So ideally, we would want a low PE ratio, specifically below the sector PE ratio of 21.72. However, they do have a better price to sales ratio, or a PS ratio, compared to their overall industry, which comes in at around a 10. And if we compare that to their competition and their competitors, they average a PS ratio of 17. So you have to pick your poison here. Are you going to lean more on the PE ratio or the PS ratio? But either way, the stock is technically overpriced based on current metrics without accounting for their future growth. Now let's jump over to our Bloomberg article. The NHS is one of the world's largest employers with an annual budget of nearly 190 billion pounds, which equates to 208 billion US dollars. And they have become a key customer to Palantir. Hopefully, in the future, Palantir can further integrate themselves into the NHS and get a large portion of that $208 billion that they spend annually. The NHS has hired US technology companies to help it in its response to COVID-19, and currently it has a £360 million contract that is up for grabs that Palantir hopes to win. Palantir hopes to increase its business with its key customer by providing key services to the NHS. And they plan to do this through acquiring various companies that are related or already serve the NHS so they can further integrate themselves and do more business with this amazing customer. Palantir has lost out on NHS contracts because of various other technology companies, such as a Canadian healthcare technology company named VitalHub. And they also, and this company actually bought and acquired Smart Info, which is a company that Palantir originally wanted to acquire for around 1.55 million pounds back in January. So hopefully Palantir can actually identify and acquire companies that they want so they can further infiltrate the NHS and get more business from them. At the end of 2021, Palantir is in high-level negotiations to invest more than 21 million pounds in the British data analysis company Sensign in a deal called Project Gondor. And hopefully they plan to transform Sensign by using Palantir's various technologies. Palantir is also part of a multi-investor group that provided $230 million to fund a company called Babylon Holdings, which is another healthcare company, which launched back in 2021 as a part of a long-term partnership between Palantir and Babylon. Hopefully, Babylon will further integrate and move their data to Palantir's Foundry platform, which is going to be great news for Babylon and Palantir, especially if Babylon ever makes something of themselves in the future, so Palantir already has that existing relationship with them. Recently, a Palantir spokesperson said that the company, referring to Palantir, is working with some of the world's most respected intelligence and security companies, and those companies continue to trust that Palantir's technology can protect sensitive data. Again, Palantir has never had a data breach, which is why so many trusted intelligence and security companies use Palantir for this reason. Palantir currently counts several US government agencies among its clients and customer base, including a large number in the defense and national security agencies and sectors and industries, such as the DoD. Palantir's management has stopped doing business over in China and other areas that are not quote-unquote in line with US interests, which further makes for the need of Palantir trying to infiltrate the United Kingdom, which is a United States ally. I personally like how Palantir is very committed to the United States and its allies, which is exactly the type of company that we need more of. However, despite forecasted revenue of $1.9 billion for 2022, Palantir still seems to be struggling, especially to turn a profit, so we might even see that profitability forecast change from 2025 to sometime in 2026, which would be another huge blow to investors. But what should we do now with the PLTR stock? So it's honestly up to you if you want to sell before earnings. I think it's going to be quite red over the next few months. However, I could definitely be wrong, but it doesn't matter to me because I plan on holding the company until it becomes profitable and then continuously holding growing even after it becomes profitable. So it really depends on your investing style, your investing strategy, and your risk tolerance. And if you are an investor or if you are a stock trader, I personally am a long-term investor and I rarely buy and sell stocks. I mainly just buy great companies and I hold them forever because I am buying the company and their business model and their assets. Or if you want to not buy or even start a position in Palantir until they show more proof of their business model, that's also good too. So it really just depends on what you want to do, but over the next couple months, I think it's going to be pretty red for Palantir Technologies, but only time will tell. Again, no one can predict the market. I only think it's going to be red because their earnings results as well as their year-end results are not going to be particularly in line with what management originally forecasted, which is going to leave a bad taste in investors. But if you want more videos like this one, remember to go and smash that like button right now. Comment your thoughts down below about Palantir and their strategies and what you plan to do with the company in the upcoming earnings report. Subscribe for more videos just like this one, and I will see you in the next YT video.